The downbeat US manufacturing PMI pushed the US dollar down, but it met the challenge. Today, its index tried to recover to a two-year high, though its efforts were in vain. At present, market participants seem to shift focus away from political developments. Investors are more interested in macroeconomic data. The US economy is showing resilience compared to a severe downturn in the eurozone and Asia. Nevertheless, yesterday investors voiced concerns because the Institute for Supply Management reported a slump in the US manufacturing sector. This knocked down the US dollar index, which was about to break the level of 100 points. The dismal contraction in the US industry puzzled the Federal Reserve and left investors on edge. Now traders are speculating on whether the US central bank has adopted enough measures or the domestic economy needs further rate cuts. In the North American trade, the US dollar index is moving away from the two-year peak. The index settled down at near 99.19. According to the ADP payroll processor, US businesses turned more cautious in their hiring. The private sector employment rose slightly less than expected in September. On Friday, the US Department of Labor will report in detail on changes in the US private and public sectors. The number of employed people is expected to increase by 140,000 from 130,000 in August. The euro and the pound sterling opened the US session with gains, taking advantage of the weaker US dollar. Meanwhile, the Canadian dollar retreated from about a three-week high. The US dollar versus the Canadian dollar pair could not surpass the level of 1.32. Being the commodity currency, the loonie has been affected by falling oil prices and jitters in the oil market. Today, Brent crude dropped below $59 a barrel. Importantly, the Canadian dollar is trading firmly below the resistance level of 1.3280. The correctional decline of the US dollar index could support the loonie, which could take the lead among commodity currencies. That's all for today. Thank you for watching and see you back tomorrow.